Good morning. Today is October 4th, 2019. My name is Olawale Okabola with Sparkus Trading Corporation, here to bring you hopefully a couple of live trades today. I got a bail around 11. Got some things to do. Don't want to sit in front of the market all day today. Right now, we are gapping higher. Please refer to my prep report for the 4th, October 4th prep report to get a handle on what's going on and kind of how I'm seeing things. Things are pretty much lining up the way I talked about. We got a gap within a 2-day balance. The one you want to go with all gaps that are not filled relatively quickly. We also got another gap entry here that will represent change on a time frame longer than the day time frame. If you don't know what I'm talking about, you got to refer to my August 4th prep report. Please do that. That way you can add some color comments. Color comments. All right. So you want to go with all gaps that aren't filled relatively quickly. Okay, here's the caveat. We're gapping in a 2-day balance area. We can't take out the overnight high and we cannot get into this gap fill. We probably will rotate back down to fill this gap. That's the caveat when you're gapping inside a balance area. So we'll see what the market wants to do. The first thing I want to see is that the overnight today value begins to overlap the overnight high and overlap the gap entry, regain the gap. Eventually, I want to see value clearly above these two references. Okay, so that's what I'm looking at. See what's going to happen today, what this market wants to do as I set up my other charts, which you cannot see. I think the market's getting ready to open right now. So I'll be with you in the open and then I'll start pausing the video and bringing you in um, for any trades that I might could be interested in. I'm setting up my other charts right now. All right, I'm lock and loaded. I'm ready to go. I am ready to go. See what kind of opening we get. There's stops underneath this little low right here in the overnight, and I'm going to remove the overnight. I can see everything on my other charts. For a longer term perspective, you can use the chart on the left. All right, we're getting that liquidation that I talked about. It's very key to see where value develops today. I'll pause you when I'm ready to take a trade. I said that wrong. I will bring you in when I'm ready to take a trade. I'm going to get ready to pause this video. All right, folks, I'm currently long at 23 quarter. Don't have time to put it on the chart. There we go. That white line, I'm long.
Order working. Order filled. Order cancelled.
I sold one. I got my stop.
Order working.
I got my stop at 23 quarter. When I talk lots, my lots are 5 contracts or greater. So I just let one lot go. And my stop is at 23 quarter. I don't have time to mark it on my on the chart for you. I'm doing my best to manage this trade. Not easy making videos and managing a trade. Not easy at all. Right now I'm in a free trade. I just don't want to give back too much of the profits. So I had a 2 lot on, 5 contracts apiece, threw one off. We're in the gap, so the market needs to act like it's in a gap. If it doesn't and peels back in, then I'm stopped out at 23 quarter, which is the white line, and we're coming down, looks like. Come on, baby, move.
Order cancelled.
I just got flat. All right, so I took the first quick pop. Sorry, I was not able to officially show you where I got in. Well, I told you 23 quarter. So let's just go through a hypothetical real quick. This is where I got in. I immediately got in once I saw the market stopped at that gap entry, peeled back. I'm in. It's a go with trade. Immediately sold the one lot. Again, my lots are 5 contracts apiece. Immediately sold the one lot, grabbed that cash. Then I adjusted my stop to 23 quarter. You see, it's great trade management because now we're coming back in. I would have been stopped out. So I got out of trade. So now I'm just monitoring this trade right now. See if this market wants to take another stab into the gap entry. Context of everything, this market is short, 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 short. Short, gap. In the gap, there's no volume, so the market needs to behave like it's in a gap. I'm not ready to take another stab into this gap entry. I want to see how things shake out. Plenty of time before 11 o'clock before I have to bail um, to place another trade if I get that opportunity. So that shows folks how you gotta. It's a go with trade. You gotta be Johnny on the spot. You gotta know what you're looking at, know what you want, and execute. Once you execute, you gotta manage your trade. Be smart. Don't get caught up on, oh, we have to fill the gap. Imagine where my emotions would be, or your emotions rather, because I'm controlling mine, where your emotions would be if you got in right here at the gap entry and you're waiting for the market to fill the gap. You could be right, but look at the uncertainty you're going to have to endure if you didn't already get in right off the open. Right now, the market's proposing a high confidence open, but we don't know that. This is the second time it looks like it wants to come back in within the gap entry. So again, I want to see where value. I'm watching value, right? It was too early for me to hang in the trade. I want to see what value. Value needs to elongate. Value needs to get above overnight high, get above the gap entry. That shows you got a good trade going north. So right now, I'm just going to peel back. I'm going to pause this video. I'll bring you in if I'm going to do another trade. If I would have had a better trade entry, I'm going to leave the blue line for a hypothetical. If I would have had a better trade entry, I would have been able to endure or hang in there for this trade. But there's a lot of uncertainty in the market. Markets are not predictable. This thing could have easily come back in my face, and I bought near the highs and come right back in my face. So I'm not sweating that the market is continuing to trade higher. That's cool. Oh, I forgot to mention, I'm in an option trade, so I'm still making money. I'm trading outrights for this video, but I bought an option in the overnight near the pullback low. And so I'm still in an option trade. I was getting ready to hedge here, meaning go short against that option, but there is no need for me to do that. This market is still pushing up, and I'm just sitting back watching value. So I forgot to mention that to you folks. So I'm doing very good on my option trade. So it's not like I'm totally out of the trade. I'm out of the trade as far as a outright contract is concerned. Now, if we get back within this gap entry once again, and get back within this overnight low, I'm going to go ahead and hedge my option. And so that way I'm protected and I really wouldn't care what the market wants to do. So once again, if you were holding out for the gap fill, look at all the uncertainty. If you didn't sell it near the highs, sell into strength, you would uh, you would be giving up a good portion of your profits. Again, this blue line represents where I got in early on in the market. So I'm just using that as a gauge to see, how good was my management when I managed to trade when I first got in. Still did good. Off to a great start. All right, I'm going to pause the video. All right, folks. I decided to flatten out on my option trade. So I am 100% flat for today. I just took it off. I don't even want to deal with it. It's a Friday. Don't even want to deal with it. We got the Fed chair talking at 2 p.m. Once I saw that, the market can very well just die, and I don't want to be left holding on to anything. So I'm flat, 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 both on the outrights and the option. If I do take another short-term option, I mean not option, but outright trade, outright contract, I will bring you in. while the market's trying to figure out what it wants to do, let's do some analysis on the spot, right? So again, I strongly recommend you review the prep report for October 4th that I put out yesterday evening, so you can have a more thorough understanding of what's going on. These halfbacks represents some true change in the time frame higher than the day time frame. Change as far as what's going on. Let me see. Well, no, I'm trading, so I can't really show you what's going on. You got to refer to those reports. These are the halfway back. We're currently cap halfbacks. We're currently in a 10-week balance area. So this is the halfway mark. Basically, it's telling me we're trading near the uh, halfway mark of the 10-week balance area time frame. Again, a time frame higher than the day time frame. We're also in a 3-month balance area. This tells me that we're trading in the middle of a 3-month balance area. This keeps me grounded as far as knowing what a time frame longer than the day time frame. What are they tracking? What are they seeing? How are they going to react, or just judging how the market reacts to these references? That helps me stay on the right side, consistently stay on the right side of the trade, because when you think about it, the longer time frame always trumps the shorter time frame. The longer time frame has money to really move the market. If they're not really active, or I don't know, they have no interest, uh, I don't want to hang in a trade too long. So that was another reason why I got out of my option. So right now I'm just watching value to see where does value build in relation to these references. If we begin to trade and value begins, not price, value begins to build above these halfbacks, that lets me know going into Monday we could have possible change, and then my thinking begins to go to the upside, and you see all the references I got going to the upside to take back a lot of this light volume. I'll show you on a profile. Halfbacks are in and around the gap entry. We feel that, especially if we feel that gap, right? Now we're beginning to threaten all of this structure that was very light coming down. I don't remember the volume count, but it was like a 60-point range or something like that. It was an outside day, closed on the low. Market got the continuation. Then after that ISM news from yesterday, shorts got caught. That P formation, watching a pullback low. Now we gap. We're gapping within a 2-day balance. We had to take this out for me to see that there could be continuation, or we're probably in a gap of a balance area, as I talked about earlier today. We're probably come and tag the gap fill. That did not happen as of yet. We took it out. We were in a gap. I wanted to see the market behave like it's in a gap, not continually come in and out of this gap. Knowing that the Fed's going to talk, the market is extra sensitive lately. I don't know, the last couple of weeks to any kind of news, economic, geopolitical, Fed, and the chair's talking. I don't know to who, and I don't know to about what, and I don't really care. I just know that usually the market's probably just going to just chill out, or things could be setting up to, you know, all the excitement seems to be gone. So the market could set up to just, I don't know, rotate around until we get some further information or news of what the market, what the Fed's talking about, Fed chair's talking about, however the market responds to it. That's at the end of the day is the most important thing. So this is what we got right now. And so when I look at longer, my Eagle Nest chart gives me some kind of perspective of what's going on in the market without all the other stuff. You know, we had an overnight double distribution. Nothing's getting filled. Nothing's going on. And once again, we keep coming in and out of the gap entry. So now I'm asking myself, well, I'm saying to myself, if we come back in, for all these longs who are holding the bag, they're sweating. They want this market to go higher. If we come back in that overnight low, uh-oh, look out. We can get some liquidation. We can get some liquidation. So anyway, that's it. That's all I got for you for now. I probably will end this video if I don't come across another trade that I'm interested in. So we shall see. Stand by. All right, folks. This is my first indication that this market is not as strong as price will lead you to believe. They bought short-term traders, doesn't matter who. The market stopped right here on a 15 minute, the gap fill. To me, that's weak. We got a complete comparator. We can easily come take this out. If we trade higher, I would want to see a double distribution after B period closed to negate this and show me that the trade is on to the upside, or at the very least one time frame higher. You can see the market is trying to peel back and take this out. So a possible very short trade, short-term trade, as the market peels back and we stop on a 15-minute base in this light volume. I probably possibly be interested in a trade, but then again, being flexible, um, this overnight high. You think about the folks who are holding the bag all the way from overnight. Ooh, let me fix that. There we go. Overnight, we got the 8:30 news, economic news, shot this market up, forced all these shorts to cover. Want to know why? Probably a firecracker. Um, and then they're holding on. We go. They want to push it, push it, push it. Right? Who are buying? Who is buying at near the highs? Only people that could be buying are shorts that are covering. They're folks who are short who are finally just starting to cover their trade. That makes them a buyer. Those are typically the people buying near the highs. And then you got non-thinking folks who are looking to hold on to the trade, right? They're probably buying, thinking this market's going to go higher. So you got a lot of people holding the bag. They cannot afford for this market to get below the overnight low. I'm giving you answers to the test for the rest of the day, or you can have an issue, a problem. You can definitely get some liquidation, and then we begin to challenge the gap fill. So you want to watch that. Keep in mind, value, overall value is clearly higher. Clearly higher. You can see here it's easier. Clearly higher. So that we need one time framing to suspend higher value. So there's a lot of concepts going on that you have to be aware of. That you got to be Johnny on the spot to understand what's going on to be able to successfully execute and remain mentally flexible. So I just wanted to share with you kind of what it takes to be a consistent trader using your own analysis and not looking for any. Well, I'll take that comment back. Nevertheless, to be a consistent trader, you got to just be strong on structure. You got to be great on trade management. You got to be a good money manager. There's so many things, and then the psychological factor. What's going on is the psychological factor of the folks who are holding on. If you were long, what would you be thinking? How would you be feeling? So you got to also factor that in. So it's just not a matter of where do I get in, where do I get out, and all that other mechanical stuff. So this is what you need to see if you're long. If you're long, God bless. Not saying that you still can't go higher, but the market's not behaving like it's in a gap. Hopefully, it can catch another bid. The only thing that would suspend this week low is continuing one time framing higher. So this video is about almost 20 minutes long. I like to keep my videos about 10 minutes. So I'm going to go ahead and end this video. I had a fabulous, fabulous week and topped it off with a great day. So there really isn't a reason for me to get in this market unless the market absolutely just offers me free bread. Okay, folks, this is Olawale Okabolo of Spartacus Trading Corporation. You have a good week and look out for my prep report review and prep report for Monday's trade. Take care.